Okay, good morning. Thank you all very much for joining us for today's webinar. We'll talk about liquidity. Certainly, something that obviously QwickRate has been involved with for a number of years, but certainly the last couple of years have seen a pretty dramatic kind of pivot in liquidity. So we're going to talk a little bit about it, and much like we've done with our Cecil Coffee Talks, would hopefully expect to kind of come at the next 12 months with some quarterly discussions like this as well. As you might know, my name is Sean O'Brien, the president of QwickRate, and am very pleased to be joined today by Jason Heinrich. Jason, obviously many of you work with either through the marketplace or with our Cecil solver, but Jason, if you want to go ahead and introduce yourself.
Good afternoon. Good morning, everyone. Jason. Yeah, I probably talked to a lot of y'all on getting set up for either Cecil or investing and issuing. So thank you all for joining us today.
Yeah, thank you, Jason. So yeah, again, I think, this is, really ever since the pandemic, the world's just been changing, pretty dramatically in a number of different ways in our little corner of the world. In the QwickRate marketplace, obviously, we've seen liquidity needs and just kind of positions change. So we want to talk a little bit about that today. We want to talk about the things that you might be able to do. I think often as the case is with liquidity, a lot of the tools and strategies that we might employ, many of them you may already know. It's really trying to best assess, I always think, at the credit union, your ability to potentially execute a lot of these. So we'll touch on those, a few ideas there. Jason's going to walk you through the marketplace. Just it's been a while, so we're going to take you through it. And then we just want, we know a lot of you have heard about QwickBonds, or we've shown it to you. You've been on maybe the webinars with Matthew. So we just want to just show you a slide or two there and just, again, tell you how it might be able to help you. I think the important thing here is, in times like this where things are a bit uncertain and it's just unclear how you're going to do, you want to have all your tools available to you. And I think that's really what we want to get across today. So as I mentioned, really in just, 2 short years, we really have seen a pretty dramatic change in liquidity, right? If you think back to the pandemic, all the fiscal stimulus, a lot of that ended up in our credit unions, into the financial system, and put institutions in a situation where they had a tremendous amount of excess liquidity. For the last 12 to 18 months since that point, the questions often were, how much of that is going to stay with us, right? How much of that liquidity is going to stay with us? And now, as we move into 2023, and really what we've kind of seen begin to happen in 2022, is there's a number of new issues that we're dealing with, right? Obviously, the, in some ways, historic run-up in interest rates is creating, or potentially creating, an interest rate risk situation for many of us. For some of us, we're starting to see that excess liquidity run out, whether it was either into loans or just starting to move and be disintermediated from us, to a situation where between run up in loan demand, maybe an underwater securities portfolio, we're starting to potentially see a tightening of liquidity. For some of you who have securities portfolios beyond CDs that maybe were longer dated, those might be underwater today. So that, turns off a potential liquidity source. Certainly I think in almost every market in the country, a credit union is dealing with rising deposit costs. Those our members had stayed pretty quiet, but now, it's almost impossible to not go somewhere or see somewhere some type of advertising offering higher rates for those dollars. Increasingly, in spite of all the the troubles we've seen this year in terms of, or I shouldn't say troubles, but maybe the angst in the economy, you've continued to lend, right? There's been a strong and continued loan demand, which is great, but it also, again, eats into that liquidity. And then finally, it's hard to know what's going to happen over the next 12 to 18 months, but, there's certainly I don't want to say consensus, but there's a strong feeling that with the rise in interest rates, that often has led to recession or recessionary type of an economy, and that typically would lead to credit issues. So a number of contributing factors that could really alter our liquidity positions as we move into 2023. I do want to touch on this credit quality topic, right? Just because, again, there are some things we can do, but it's certainly understood that credit qualities often lead to liquidity problems. So again, I think being aware of things we should be, if we're not already monitoring, reminders can help, right? Certainly large borrowers, we want to be monitoring. I think certainly with the run up in interest rates, we want to be considering and maybe reevaluating what our offering rates are. I think, is it possible, are there new deposit type accounts or tiers where we want to do it to try to bring in new monies? And then certainly, as we're going to touch on today, we think potentially utilizing wholesale funding such as our marketplace is something most might want to consider. CD specials, and Jason's going to touch on this, is something we often always do, but I think, again, we want to make sure we're monitoring any potential cannibalization. So for some potential headwinds, right, as we enter 2023, as we touched on, the rise in interest rates, the yield curve inversion, meaning that the shorter term interest rates are higher than the longer term, is usually a precursor for recessions. I say all that, and at the current time, credit quality is as good as it's been in a number of years, and so it's always with kind of some hesitation we talk about any types of credit issues, just because everything has been so good recently. But I think there is probably some expectation that we're gonna normalize. And then again, this this rise in rates that has been precipitated by the Fed, certainly tends to make our deposit landscape much more competitive, as alternative investments to our CDs are being priced much more aggressively. So with those higher deposit costs in line, right? I mean, we typically see that those often will outpace the ability for us to pass along higher loan rates to our members. So I think we've got to be sensitive to that. And then sometimes, we wait, right? I think there's an instinct to try to time the market as best we can. And so oftentimes we won't start to deploy or start to look into longer dated instruments because we're worried about rates continuing to go higher. So, I think those are just, again, some things we have to kind of evaluate here, as we're probably closer to the end than the beginning of the interest rate hikes. And so, I think as you're thinking about, how you might deploy monies in 2023, again, I think depending on where you want to go out in terms of maturities is something to be evaluating. And then finally, if you do already have securities in your portfolio that are underwater, I think you need to monitor and determine, how that might impact your liquidity as you go into next year, because you don't want to make those unrealized losses realized. So again, what we're seeing, liquidity levels are still pretty good. Inflation's running crazy. The Fed is certainly doing everything it can to tamp down the inflation. And then again, we've because of the fiscal stimulus back from COVID, we still have seen really strong inflows into our credit unions. One thing that I think, again, internally, all of us should be doing is making sure we identify and we know who some of our larger balances are within the credit union. I think being proactive and getting out in front with those members is a good practice. I think we want to make sure we have ways to establish and monitor any type of deposit outflows that might be occurring. I think I'd be also evaluating, if I'm going to let some deposits run off, I'm probably, if I have to accept that, then, ones that only have a single relationship with the credit union are probably the ones that you would want to let go first. But again, I think you want to make sure you've got some kind of, process to be evaluating those types of, our members. Excuse me. A question came in. I'm just going to stop and take it. I should have mentioned this at the top, as many of these webinars as Jason and I do, sometimes I just forget the most obvious things. We will be sending a link to today's presentation along with a copy of the slides. Okay, so again, some other things to address, right? Just again, continue to evaluate liquidity needs. I think try to make sure you've got as many defensive strategies, tactics, and potential products that you might consider, or try to keep members in. Again, I think identifying those most critical members that might be potentially at risk. And then, again, I think this is a time where we often see institutions kind of revisit their balance tiers to make sure we're being, appropriately competitive, but also then to potentially introduce, maybe a new product to try to attract some dollars or keep dollars within the credit union. Okay, so to that end, what would a new product look like, right? Again, this is where these are things that all of you probably are thinking about, but are then different within every credit union. I think you want to make sure you're thinking about any impact cannibalization of your own members might already have. Trying to be able to track that is always important, because repricing your own members' deposits can be very, very expensive. I think potentially identifying some members who have large transactional balances and seeing if you can move them into CDs is a good strategy as well, because at least, again, it gives you some certainty around your liquidity position, and as well as just strategizing on the types of maturities that you might want to deploy with any type of internal CD special. Again, I think the age-old lesson here is we typically know what we want to do. Actually executing it can be very difficult, right? Or organic deposit growth, just on the margins, always very, very, very difficult. So again, I think making sure we're tracking our own members today, but also understanding the ones that we want to make sure we're not in any way vulnerable to losing, I think are important. One of the questions that always comes up is when you run specials or any types of new offerings, how does it impact your existing customers versus maybe prioritizing newer members? I think those are types of things that you'll have to kind of kick through and decide, whether it's appropriate or how you'll handle that, and then any potential maybe targeted opportunities at a specific piece of your member base, or potentially a new member base to attract new dollars. So, I think the bottom line is, we already know this competition is going to intensify. Any type of internal deposit specials we'll want to monitor for cannibalization. And I think, as always, you want to try to make sure you have available to you as many sources of funding as you can have. And really, that's one of the things that, QwickRate can potentially help you with, right? If you've been on the side of just using us as an investor, don't forget that there's opportunities on the issuing side as well. So at this point, I was going to kind of turn the presentation over to Jason. I'll keep driving the slides here, but Jason, you can kind of just talk through how we can help on both sides of the balance sheet.
Yeah, thanks, Sean. A lot of great info there. So, depending on where you're at in your liquidity needs, you can handle both on QwickRate here, right? So both investing and funding. And if you're a current QwickRate member only doing one or the other is available to you as well. Just a quick way to tap into a lot of issuing institutions if you're an investor, and a lot of credit unions tap into if you're looking for funds. So very easy to do on QwickRate. And again, we can certainly get you set up for that quickly and easily. So a little bit of the marketplace, just in review. We're the premier non-brokered online marketplace. So again, closed marketplace only for financial institutions, mostly. No individual investors there. So it makes just the process a lot easier, and it's very streamlined, right? So the rate you put out there is the rate your investor is going to get, and vice versa. There's no third-party fees there taking a cut of that rate. Again, part of the built-in advantage of a non-brokered marketplace. And then, of course, we've been doing this for, over 30 years now. So all the tools that you need to manage both an investment and issuing portfolio, a deposit portfolio, are included here. So it's very easy to use, very intuitive. And at the end of the day, we do have some of the best customer service out there that can help you through the steps at any point in the process. So again, industry standard, first on the scene with this type of online marketplace. So we're continuing to advance the offerings that we have and just move forward, right? As we meet tag new challenges in the marketplace. So we're definitely industry standard. So what makes the marketplace different? Again, no consumers allowed. And that's just really going to streamline the process, especially as an issuer. Right, you're not doing the CIP that you would normally have to do. Everything is automated. I always go with the analogy. Hey, this is just like Amazon, right? You set up your profile, and then you add things to your shopping cart, and you go as an investor. On the other side, all this information comes into you in a prepackaged form, so you know exactly who a request is coming in from. So very, very easy to do. And again, we're not a broker in between you and the issuer or the investor. So it is a relationship that you can, it's between you and the investor. And again, avoid repricing. It's one of the other, issues out there when running a special, right? How much are you going to lose? Your current, depositor is going to move to this new higher rate. With QwickRate, again, closed marketplace, so they're not going to see that. Not like like a bank rate where money is just shifting around to the greener pastures day to day, hour to hour. So here you could post a higher rate and not have it be seen by your current members now. And again, automation is key, right? We want to make this process simple, and it is, right? You go out there, it's just like shopping on Amazon these days. So everything is easy to do. Raise the deposit's easy. You're in complete control of everything. Alerts, e-wire, just again, 30 plus years doing this, and we've really got it dialed in. All right. Again, included with your QwickRate subscription. If you're a current member, this is all included, both the investing and issuing side, depending on your needs. So, if you're one and want to, get going on the other, just reach out to us. We could certainly get you going. Unlimited customer support too. So, we're here to walk you through the steps for the first time or the 100th time. So as much help as you need in this process, we have you covered. And now let me do a little walkthrough. I'm just going to touch on a couple of the things here. Let me show my screen.
All right, Jason.
So here's if y'all are current members, this is the home page, and pretty much all of the areas we'll go are here. Now we'll start on the investing side. We'll go to the view rate screen, and again, we'll maybe actually back that up a little bit, right? So again, like Amazon, right, you have to set up your profile. So here, either as an issuer or an investor, really easy to do, right? Issuer, we need your rate details, right? What type of, how you're paying your interest, things like that, and then your wire instructions. On the investing side, we're gonna be looking for your payment instructions, your documents, your resolution W-9, signed resolution there. We'll just take the place of the signer's card. Again, streamlining this operation, listing of your authorized signer, and then your wire instructions as well when you want to call home those funds. So let's say we've set this up, right? And now we can go into either publish rates or invest. On the issuing side, this is what it looks like, right? We'll come out here, if you're looking for deposits, you come out here at any time to put a rate out into our marketplace. Let's just add some rates, right? So it brings up this screen. We can, plug in, a rate here. Let's do, I don't know, 0.45. Let's do 4.5 or maybe 4.5. Let's see, I might be in a different account. It may not let me. Yeah. Well, so here, normally what we would do is be able to analyze, get some information on where we are in the marketplace, right? At this 0.45, are we the highest rate, 10th highest? Where are we at in the mix? Because that is really going to determine how much money you bring in. Once you've set the rates that you want, you can also kind of say, hey, look, I'm looking to get a specific amount per term, or in total, I want, 20 million, whatever the case may be. Once you hit those thresholds, you have the option to either, hey, just let me know, pull my rates from the market, or lower them by some amount. So there's a lot of automated tools built in here. So once you have your rate out there, that's when the investors can see you. And we'll go to that screen here. And once you put a rate out, you'll be here in the mix with the rest of the institutions that are looking for funds. So as an investor, this is where they go. They'll come out here, see the rates. They'll typically have a listing of institutions that they already have an investment with to prevent double placement. And then at this point, it's simply a matter of adding these rates to your shopping cart. And then we can check out. Basically, once we check out, the other side gets all of that information, right? Your docs, who you are, ACH instructions, all that information. Once they accept, all that information is here for the wire instructions. The wires are all here. Get your wire at the door and it's a done deal. So very easy to do. Ton of information on the screen. So, and again, with this, everything that you're going to need to manage this portfolio, either on the investing or issuing side. So you have your portfolio here and tools and reports for, everything else that you're going to need. So, it's all here. And again, if you are with us currently and are doing one side or the other, want to get to the other, it is included. So reach out to us. We can certainly get you set up, get everything going for you, just to make sure you have all the tools that you need there. So that is it. I'm gonna go ahead and let me stop sharing. Sean, I'll throw it back to you. Okay.
All right, thank you, Jason. So again, as Jason touched on, Jason, feel free to jump through here, but this is just kind of a recap of just kind of what he showed you. The ability to have access to the real-time information, source for direct funding. You can certainly invest, and then as Jason's mentioned, right, over the 35 plus years we've been at this, I think through the help of you, our subscribers, we've built reporting and tracking tools to help you manage the portfolios. We've developed other quick tools to help you manage your portfolios. And then as Jason touched on, Jen, Zoe, Andrea, Paige, Debbie, we've got an outstanding service team here to take care of you and just try to make this process as easy as we possibly can. Jason, anything you want to add here to this page?
No. Again, just reiterating, as either issuer or investor, why this is benefit, right? You got a bigger audience, more institutions means larger deposits. Everything is here, right? One place to manage it all. So super convenient. And again, you have anything, right? No third-party fees. A lot of times too, hey, my broker doesn't charge me anything. Of course they do. They take a little bit out of your yield here and there. It's not the case on QwickRate, right? The rate you see is the rate you get, and that's the rate that was offered by that issuing institution. So, and again, great way to diversify everything, right? Get a lot of large deposits along with your members. Just keep everything a little bit more diversified. And at the end of the day, every institution on QwickRate is federally insured. Our one criteria for pushing rates is that you are federally insured. So again, really a no-brainer as an investor, right? You know that these are all insured. You're good to go. The information's there. So it makes just things so much easier.
Perfect. Thank you very much. From a regulatory perspective, I think the important things to note, obviously, where we've maintained the non-broker designation through out our entire existence. That's really what kind of pioneered our marketplace. In terms of risk management, Debbie Walker, who many of you may have spoken to in the past or communicated with, she's developed all the necessary information for any type of due diligence package that you might be interested in, and is continually and constantly updating that to keep it it's up to date. Jason, any?
Absolutely. Yeah, no, she's a great resource, and you'll have access to her. So, definitely reach out. If you're unsure about how to classify these deposits, how you really need to set them up, then just another resource available to you here at QwickRate.
Yeah, and I think that's the important thing to do, right? We want to make sure this process is as seamless and as anxiety free as we can make it. And so Debbie will do a great job sharing you with her all of her experience. As I mentioned, she's actually been with us the longest. She's our most senior employee, so she really has been here from day one in developing our marketplace. So if you haven't had a chance to talk to her, certainly reach out if you have any questions. She'll take perfect care of you. So again, kind of summarizing, really what's driven us for all these years are things that we kind of describe as quick connections, right? We made to make it easier for you to fund and invest as much as you need. We've tried to develop tools that, fully automate the process, but, including from the actual transaction all the way up to the reporting and tracking of it. And then our service team is here to assist with any issues that you might have. So, we think the 35 plus years in the business has proven to us that we'll take good care of you. For many of you, though, we've tried to find ways to add more value. I think during the pandemic, we thought about a number of ways, and we certainly heard from larger credit unions over the years about wanting to buy in bigger blocks. And so one of the things we've developed over the last couple of years is what we call QwickBonds. I think many of you may have noticed this tab on the top of the homepage. If you haven't, I would encourage you to take a look. This is an opportunity for you to not only buy and see and compare our direct rates, but with other rates that are out there in terms of agencies and treasuries, et cetera. Those are also, 100% guaranteed. If you need to potentially buy in larger blocks or maybe different maturities, you can do that. You also have the ability, if you are looking to sell any securities, to do that through QwickBonds. So I don't want to go through a whole demo of this today, but I do want to suggest to you there's more here for your QwickRate subscription. And I want to point that out. You have access to the QwickBonds application as a QwickRate subscriber. So, please reach out to Matthew or to our service team, and they'll get you scheduled with Matthew, but he can talk you through any questions you might have. He can show you how you can potentially compare, these rates to the offerings and just make sure we're maximizing, every dollar of investable dollars you have. So, again, we're trying to stay current, be evolving, try to provide you with as much as we can through our subscription. And certainly we think we've touched on something here with QwickBonds. So if we can be of help, please let us know. As many of you may know, I'll just share this. I know we're getting late in the day on it, but the transition to the CECL for expected losses, credit losses next year. Many of you have probably spoken with Jason and David about this. If you haven't, we do have a tool that's available. So again, certainly welcome to talk to you about that. And then our newest application is IntelliCredit, where again, we can assist the credit union with loan reviews, but also have developed some cloud-based applications. So, we're trying not to sit still. We know your needs are evolving, your needs are changing. Where we feel like we can try to add value, we're going to try to do it. As I mentioned, we're also going to try to be, more present around liquidity and investing here. And, look for the, another quarterly webinar in the first quarter of the year. And again, we'll kind of try to stay here and stay close to what's happening and see what, additional information or insights hopefully we can share with you. Certainly, as always, want to open it up to any questions you might have. Just a reminder, we will send a copy of the deck today and a link to the recording. So look for an email from us, from David or Jason here in the next day or two. Jason, any final comments before we let everyone go today?
No, I mean, I was say, hey, also let us know what you're thinking, right? What are the challenges you're facing, and how can we better serve you? It's I think one of the great things that we've done here and why we've been so successful is our ability to, fit into new areas where we can help you out in. So let us know what we can do to make this better. What other things are you looking for? So let us know, because we're again, like Sean was saying, expanding into a lot of different areas. So we just wanted to be on the front edge of that. So let us know how we can help you more.
Awesome. Thank you, Jason. So, if we can help, reach out to us. You can call us, you can email us. We can talk about pricing. If you're a new subscriber, we can talk about maybe all the, QwickBonds or anything else. If you're an existing subscriber, we can talk about investing and issuing, as Jason touched on. And then, certainly if there's any topics you'd like us to cover in a future webinar, please, as Jason said, share that with us. We really are trying to be responsive and, and assist you in as many ways as possible. So please don't hesitate to let us know how we can help. As we mentioned, we do have a couple of upcoming, CECL presentations. We have our monthly installment of Coffee Talk on December 16th. If any of you are subscribers there, Paul Allen from Saltmarsh, the CPA firm, will join us again. And then David and Jason will do a demo on December 8th. Are you handling that, Jason, or is David handling that?
I think David is.
David is. So David Serial will be covering this on December 8th. And again, any questions, just email us at info@QwickRate.com. So we also have an upcoming loan review webinar in December. This will be handled by David Ruffin of our IntelliCredit team. So if this can be of service to you, please, listen in on that presentation as well. So on behalf of Jason and all of us here at QwickRate, thank you very much for joining us today. Have a happy Thanksgiving, and let us know how we can help. But otherwise, we'll let you get back to your day. Jason, any final words?
Perfect. Everyone have a happy Thanksgiving.
All right. Thanks, everyone. Have a great day.
Thanks, Matt.
All right. Hey, thank you, Matt. That is nice.